Hey guys, what is up? Fabio here. Hope you guys are all doing well and welcome to another educational video on this platform. In today's video, I'm going to be explaining how to conduct a top-down analysis all the way from the daily down towards the 15. So without further ado, let's dive into towards this video and I hope you guys enjoy. Okay guys, so we're currently located on the daily, so let's conduct our analysis from the daily down towards 15 so that we're going to be able to get an entry. First of all, daily, what do we use the daily for? Well, we use the daily purely for areas of supply and demand and market structure. So let's just begin by marking out our market structure. So over here I have this line tool, and this line tool is going to be used to identify an area of a daily break of structure. So first of all, let's just have a look at the overall trend. So as we can clearly see, we've been trending in towards the downside. We had an upside correction. However, then after that, we shortly had downside continuation. So over here, for instance, we have our low. Let's just start out with marking out this low over here. This low got broken, which means that we have to look, okay, which low or which high, excuse me, broke this low over here. Well, that was this high over here. Then this becomes your new lower low. Shortly after that, we get a pullback. However, this high broke this high, which means that Aussie dollar flipped bullish for a moment. As we can see, flips bullish. This becomes your high. So which low broke this high? Well, that was this low over here. Then we get that retracement back down. Then after that, we get upside continuation. What happens? Once again, we see a break of structure on the daily over here. So we have that bullish continuation. This becomes your higher low. This over here becomes your higher high, because from this higher high, not from this high, but from this higher high, we start getting that pullback down. However, what then happens is that we break this low over here and we create a new lower low over here. So which low or which high broke this low? This high, so the highest point that broke this low is going to be your previous lower high. So this is your lower high, or excuse me, this is your high which broke this low, and now we're potentially going to be forming a new lower high. So now what do we want to do next? Well, we want to start looking at, okay, well, where on the daily can we expect a pullback towards? Well, let's have a look. Over here we have our daily sell zones, and let's draw these in. So over here we have some clear daily supply, so all these bullish candles which are engulfed and followed by a swift move down, those are going to be my daily sell zones. Let me just change the color a bit. I like it when they're blue. So over here we have a daily sell zone, over here we have a daily sell zone, and of course we have much more, but I'm not going to draw those in due to the fact that we're currently just not there, and otherwise my chart is going to get all messy. Then after that, what we can do is just quickly draw in a fib. Just add in the 0.5 fib. I like doing that more and more nowadays. And what we can then clearly see is that, okay, well, price has been stalling inside these areas of supply, mainly, of course, inside this area of supply. We hit the 0.5 fib. We've kind of seen this ascending corrective price action, and we could potentially expect a dump. So this is pretty much what I always do on the daily time frame. Just quickly look at market structure, draw in my fib levels, look at supply and demand levels, and from there I go in towards the 4 hour. So now let's have a look at the 4 hour. So what we can currently see on the 4 hour is something pretty different. Why? Well, because if we just quickly mark out our 4 hour structure, what you'll then see is essentially that if we start over on this high gets broken by this low, then this high gets broken by this low, this high gets broken. Let me just adjust this to our 4 hour line. Okay, so it's not copying, but let's take this line over here. 4 hour break of structure. Over here we have another 4 hour break of structure. Then over here, did we have a 4 hour? Yeah, over here as well we had a 4 hour break of structure. Then what happens? We have a 4 hour break of structure to the downside over here. And let's say you didn't see this as a pullback. You could also take this low over here, but I'm just going to take this low over here for the sake of it. Then you can add in these 4 hour dots. I just like doing that to just identify market structure slightly better. And what we can then clearly see is that this over here is the high that took out this low. So the highest point that took out this low is going to be your high that you want to mark out. Then this becomes your new low. This becomes your new lower high. This becomes your new lower low. However, let's have a look at how we, for instance, were going to be able to take a trade, because we've now identified, let's say, daily market structure. And let's just replay it a bit to, let's say, this price action over here. Quickly go back in towards the daily. And okay, at this point in time, what are you viewing? Well, you're viewing a 0.5 fib rejection. You're viewing a supply rejection. And what you're seeing is this daily bearish engulfing candle, which is signifying that a lot of bearish momentum is coming into the market. Furthermore, we're also bearish on the daily. Now, going in towards the 4 hour, what we can then see is that we've had this 4 hour corrective price action. 4 hour has broken structure, so 4 hour structure is now in line with daily structure, and now we can potentially look for those shorts on the 4 hour. So this is going to be your area of 4 hour supply over here. And what you can then essentially just do is, because you're trading in line with the 4 hour market structure, is simply set a sell limit on top of that 4 hour area of supply, set your stop loss above the highs, and then, for instance, target the next 4 hour area of demand. So we have a 1 to 3. Let's target a 1 to 3 and just simply press play. Boom. Target hit. So this is a perfect example, and of course I already knew that the trade was going to play out. However, by continuously doing this, trading in line with market structure and supply and demand, it will be very easy to master this kind of trading, as you can simply just set a buy and a sell limit, and all you have to do is trade in line with the market structure and supply and demand. So yeah guys, that was it for today. Just a quick top-down analysis explaining how I personally conduct it. I hope you guys were able to find a lot of value in this video. If you did, make sure to leave a like in the description down below. You can also join our free Discord server. Links is also in the description down below, and I wish you all a fantastic day. Thanks guys.